Hey, good morning, everyone. It is 6 a.m., half an hour before the market is set to open on Thursday, March 28th. And happy Easter. So tomorrow, the markets are going to be closed in honor of Good Friday. So there will be no morning session or afternoon session tomorrow. Today is also the last trading day of this week. So far, we've had a pretty muted week. Let's go over what happened yesterday since we missed the sessions. So S&P bounced off of that EMA 8, and we came and we closed near the all-time highs over here. So it is the highest close, but not the highest high. So we came close to the all-time high, but we didn't quite get there. So that is a even though that is a big move for a single day, well, you can see that for the week, all we did was trade sideways, and that's what we were expecting. We're a muted, limited range. We said that we'd be bound by the EMA 8 and the all-time high, and so far that has been true. Whether or not that holds true for today, we were saying that it was going to be dependent on how the GDP report came out today. So we'll want to look at that in a little bit, but first let's take a look at our futures. Oh, before we look at our futures, we're right back to where we were on Friday, which isn't too surprising given that we closed very close to where we were on Friday, and everything across the board is once again green. So this is going to be very difficult for, as we saw on Friday, for the market to continue to move upwards for any length of time when everything is like this. This is like the analogy we had last week, which is 100% of the kids in the class are getting 100% on every single assignment and every single test. It doesn't tell us anything. We can't say anything about the quality of the students because they're all just acing everything. So we can't say anything about the quality, whoa, excuse me, of the strength of all of the stocks in the anywhere. It doesn't matter if it's the S&P 500 or the Russell 2000 or the Dow Jones or the Nasdaq. It doesn't matter. They're all performing super well. So we can't really say which ones are doing better or which ones are showing even more strength. And that makes it difficult to invest to the upside. Now, when we get like this, we shouldn't believe that the rally will continue for much longer. There has to be some sort of pullback before we can bounce back up. Just like earlier this week, we had the pullback to the EMA 8, and then we could see which ones were strong, which ones were weak relative to each other, and then we can make our higher probability investment decisions. So yesterday morning before the move, actually not yesterday because we gapped up, but Tuesday, Monday, those were the days to find the longs and then be in position to capture the movement that we got on Wednesday. So today it would be another wait and see. And so went to the long side, we would have to wait and see which ones pull back, and that way we can see which ones are strong. So let's take a look at this futures market. We're probably not looking very directional given the state of things that we just saw over here. Oh, and we're not at all. not even close. This is super flat. Super flat. There's only 1 point on the S&P 500 that might as well be zero, and not even 10 basis points, 7 basis points on the Dow Jones, and same with the Nasdaq. So one's pointed up, one's pointed down, but everything is completely random right here, and completely flat. So it looks like probably that GDP report didn't do much. Let's take a look at our intraday. Yeah, flat, super flat. We got a little baby movement right here at 5:30. So that's the GDP report, but it didn't really decide anything. It didn't tell us much information either way, or at least the market's not reacting to it either way. So GDP prior 3.2 consensus 3. Oh, it's a little bit better, but the market just isn't really. And personal consumption expenditures. Can I get detail on the? Nope, I guess I can't. Yeah, everything's a little bit better. We're spending a little bit more, but without the detailed report, we can't really say whether that is a inflationary or not. So I'm surprised we don't have details on the PCE. Either way, so I guess this is if I'm only going to go by percentage point, I would say, well, we're spending a little bit more. That might be inflationary. It just depends on what they're spending on. And then we have a better GDP, which can also be inflationary. So inflationary, but that also implies if the Fed doesn't get political, then we'll have higher rates for longer, which wouldn't be great news. But the market is exuberant. It's not really reacting to that, and everything is just flat. So that turned out to be not too significant, which is okay, not too surprising given the holiday week. The reaction could potentially come on Monday when the senior guys are back. It might happen at the open, given that that's mostly retail trading that happens at the open. And then we'll lose it. If we get a strong reaction at the open, we'll probably fade later on in the day. So whether we go up or go down, and there's a good chance that if it's a huge reaction, then we'll fade. We'll go in the opposite direction towards the end of the day as the institutional and professional traders come in. Friday, I don't know why we have these reports coming on Friday without a market open, but personal income and outlays, that's going to be super important. And then I don't know why Jerome Powell is speaking on an off-market day. And international trades in goods, that would be important if the GDP hadn't come out. So we could get a strong reaction on Monday anyways, simply because all of these reports are coming out when the market is closed. So volatility volume will probably come back on Monday. Looks like we got at least above the average yesterday with that movement upwards. The fact that we stayed in this range is not super positive for the S&P 500. So again, we're just expecting to chop sideways. There's a small chance that we could break out above that all-time high today, but I don't think so. I would lean towards another pullback towards that EMA 8. We're just not as far away from the EMA. For example, on Friday, we were quite significantly above the EMA 8, but now that we're at the same level of 4 days later, the EMA 8 has come up significantly. So we're a lot closer to that EMA 8. So even a couple of days of chopping sideways, we would touch that EMA 8. So I'm not seeing too many forces right now to make us believe that we could breach the all-time highs, other than we're not too far away from them. So we might just randomly drift above the all-time high, but not with conviction and momentum, which probably means we're either going to pull back to the EMA 8 or chop sideways. Let's take a look at a few other things like QQQ. Let's look at finished chart indices first. QQQ sideways, still in this box. So really just sideways movement. If we don't get strength in the tech or the QQQ, the S&P is probably not going to go significantly higher. We went over this earlier this week. When the indices are carried by blue chips or the mid-risk sectors, they're not moving upwards with strength. They might have momentum in the sense that it'll just keep on rolling, just kind of the slow, steady grind upwards, but they're not going to move up with conviction or go parabolic or keep on jumping higher. So we need strength in QQQ in order for that to happen. The strength in the QQQ for the past year has been in the chip sector and the AI sector, which is really just tech. The AI AI hasn't, I don't know why suddenly there's this interest in AI, except for maybe the progress that we've been making, because AI has been around for a long time, but that's just normal coding and just normal. I remember when I was in college, I did a computer science minor, and the Japanese dog, I forget the name of it, that Japanese robot dog, that was AI. That was able to play with you and interact with you. That was like 20 years ago, or maybe more than 20 years ago. So there's not anything special about AI other than that we've progressed to the point where we have interesting tools like ChatGPT, and every company is coming out with their version of that. So by itself is not super special, but it is driving the semiconductors, and we're not even close to the all-time highs in semiconductors. So that's interesting. We do need to match and go above the all-time high of the semiconductors if this rally is going to continue. If we match it and then come down, that's a double top, and very likely we're not going to see new highs for quite some time after a double top or a triple top. In that case, the first phase of the bubble or the current fad in AI will probably be over, and we're not going to hear too much about it for a little bit. NVIDIA has been having their conference, and it didn't seem to help over the past week or two. We haven't made any new highs. We came kind of close to it Monday, and then we faded back down. So this is very close or very similar. We could call this a double top. So if NVIDIA doesn't bust out of here, then we're probably going in a short to medium term downward projection. So we'll probably hit that EMA 20 and then maybe even that MA 50, and then we'll see from there if it can bounce and rally from there. Otherwise, we're going to keep on coming down, maybe hitting that MA 200. So NVIDIA has been really important for the past year to year and a half in terms of the rally. So if we take a look at their performance since the beginning of 2023, okay, they're up 612%, somewhere over 600%, we'll call it. So that's a huge amount. The S&P was only not even 30%. So over here, not even 30% from the lows. Oh, actually, I'm not sure if that's from 2003. So let's see, from 2003, 38%. So 600%, 38%. NVIDIA keeps getting bigger, right? It took over the number 3 spot and was threatening to take over the number 2 spot. It was like getting bigger than Apple. It was getting bigger than all these huge companies. It was challenging Google. So NVIDIA is a huge amount of the S&P 500. It's been carrying a lot of this movement in the S&P 500. And if NVIDIA cannot continue, or if it starts pulling down because now it has huge market cap, it's in the top 3 or certainly in the top 5 in terms of market cap. If it starts coming down, then it's going to start dragging tech with it. And a lot of the other largest or top 5 or top 10 market cap stocks in the S&P 500 are also tech stocks. So if that sector goes down, then we have a huge amount of market cap in the S&P 500 getting dragged down. And it's going to make it extremely difficult for the S&P 500 to continue to move upwards or even chop sideways. So we'd likely start to experience that pullback that we've been anticipating for quite some time now. So the SMH, we're going to want to watch that very carefully, see how it behaves, if it matches, if it approaches the all-time high, whether it breaks out or not. NVIDIA is going to be a very important one to watch as well. Can it bounce off of that EMA 8 or EMA 20 and then challenge and break above the all-time highs? If not, then either we're going to keep on chopping sideways or we're going to start pulling down, and that's going to drag the entire market down. So NVIDIA is very, very important to watch right now. And if they couldn't rally and get to an all-time high on the news of their new chips and this giant conference that they've been holding, it's not too optimistic that it can continue to move upwards. All right, so let's take a look at momentum levels. We already saw that we couldn't get too much information out of this because everything's super green, but we can look in terms of 90-day highs, 90-day lows. So let's go over here and take a look at that. We're at extreme levels again, which I guess again isn't too surprising since we are very close to the all-time highs. So 90-day lows, we only have 6. 90-day highs, we have 400. Oops, don't delete that. 443. So just a day ago, we're at 115 90-day highs and 24. So what happens when we hit the 400s? Well, when we have 443 out of 505 stocks hitting their all-time highs, it's very difficult, if not impossible, for that to keep on increasing. Certainly, by the time we hit 500, that's the limit. So last Friday, we hit 496, or Thursday, we hit 496, and then Friday, we're back to 142. So maybe I've been saying Friday all this time, and the all-time high actually happened. Yeah, well, we got that super large, no, Thursday. Thursday is where we hit the all-time high. So I was a day off earlier throughout this entire video. But when we hit those 400s, that's a tendency to pull back to the EMA 8. And we hit that 400 yesterday, 443. Is there a little bit more room to move higher? Yeah, we could go up to 490, 500, but it's just not too likely. And even if we hit that, then immediately we would expect to come back down to the EMA 8. So are we going to make all-time highs or challenge? If we do, we're not going to go significantly higher than the previous all-time high. And then we're going to expect that either today or Monday, we're going to pull back to that EMA 8, which is not too significant given how close we are to the EMA 8 right now. So it may be time for another pullback to the EMA 20, just like right here. So let's see what Wednesday, March 13th, Thursday, March 14th. We had 303 on the 13th. Yeah, so we didn't get quite as extreme. 300, 302 was the peak, and then we had that 2 days in a row, and then we pulled back down to about 100. So 400, 300 and something is already potential. It's already extreme. It's more than 50%. But for sure, in the 400 is a very high extreme, and that almost certainly we would pull back. So here we're at 443. We can't really expect to have a huge day today to the upside. There's a very strong force that is pulling us back down to the EMA 8 and the EMA 20 today. So today could be, if you see this drift lower, however, we start to see separation between the stocks and their performance. We get to see which ones are performing more strongly. And then if this trend is going to continue, then we can start to strategize or move ourselves into position on the stronger stocks so we can be in place when they bounce. That's how we should be playing this. So we should probably not be trying to enter any new positions today, but maybe on Monday or Tuesday if we pull back to the EMA, or in this case, more likely to the EMA 20. Remember on Thursday, we were saying that, well, we're probably going to come to the EMA 8 or a little bit lower, somewhere in between the EMA 8 and EMA 20. Well, we came down to the EMA 8, but there's still that potential. We were seeing that potential to come in between the EMA 8 and EMA 20. So right now that potential would still exist, but since we're so close to everything, we might actually come down and touch that EMA 20. So we'll want to watch out for that. That would be the next opportunity for a bounce, but is also given even more. We just keep on stacking reasons for us to anticipate a pullback. So if we came and challenged the EMA 20, we would want to wait for a confirmation. We would want to see that bounce and see a green bar with a high or a close above the high of the bar that touches the EMA 20 in order for us to be comfortable that we're going to head back higher and at least maybe come challenge the all-time highs again, if not go further above it. So otherwise, we might come down and break the EMA 20, and we have the potential of moving to the MA 50, in which case we'd start thinking about hedges or very, very short-term bearish positions, because it could bounce off of the EMA or MA 50 as well. And that would be a correction, or sorry, a pullback, 5% pullback. I guess only 4% pullback at this point. So, but that enough close is in the ballpark. And so that could relieve pressure enough for us to go the next leg higher. So we wouldn't want to go in any long-term or very aggressively bearish positions, because it wouldn't really be a change of trend if we did that. If we hit the MA 50, if we hit the MA 50, come back up to the EMA 20 and then bounce back down, then we have the potential for a change of trend. But we don't want to get ahead of ourselves and go super bearish just because we break the EMA 20. So I think we've got a very good picture of what's happening in the markets right now. The things to watch out for, especially are NVIDIA, to see if we can break above that all-time high, or if we bounce off of this EMA 8 or EMA 20 in the next few days, or if we break down below. If we break down below the EMA 20, then that it's pretty likely that our QQQ will do the same thing and we'll start challenging the MA 50. And then if it goes on for a few days, then we will probably see the same thing happen in the S&P 500. So we definitely want to watch NVIDIA and the semiconductor sector very carefully. Right now is more of a wait and see type of day, or wait until we get a pullback before we re-enter any long positions. So I think that's a very clear picture. We're only about 5 minutes away from the open. So we'll end it right here. Have a wonderful day. Have a wonderful weekend. Have a wonderful Easter. I will see you guys on Monday morning. Oh no, I'll probably see you in the afternoon today.